Well, Tesla stock nosedives as tensions now escalate between Elon Musk and President Trump. We're taking a closer look here at the moves in our chart of the day, and Yahoo Finance's Julie Hyman joins us now with a closer look. Julie.
Tesla shares continuing to fall, actually, in the after hours. They're down another 2% or so after this big 14% drop over the course of the session. And it all began right around noon here, and that's when we saw the rhetoric really heating up between President Trump and Tesla CEO Elon Musk. This has been building in recent days, right? We had yesterday Musk out on Twitter or on X complaining that the tax bill was what he called an abomination, saying that it really wasn't good because it's boosting the deficit. And then President Trump was asked about that today. He was meeting at the White House with German Chancellor Friedrich Merz and was asked by reporters about Elon Musk. And Trump said, quote, "He's upset because we took away the EV mandate. I'd rather Elon criticize me than the bill. The bill is uncredible." And then Musk fired back on X, call it about 20 minutes later here, maybe around here, saying, "Slim, beautiful bill for the win. Keep the good, remove the bad." In other words, he said there is no such thing as a big, beautiful bill, that the two things don't go together because of the spending, which is at odds, he says, with, of course, the efforts that he was trying to do at Doge. Then right around 12:45, you had Musk posting on X that without him, Trump would have lost the election. So a lot of vitriol coming from Elon Musk via X towards President Trump today. Then things escalated, I guess right around 2:30. And that's when Trump was asked again about Elon Musk. He said at that point that Elon was wearing thin. And he also posted on Truth Social, his own social media platform, about it. He said the easiest way to save money in our budget, billions and billions of dollars, is to terminate Elon's governmental subsidies and contracts. And that's when, again, you saw kind of the momentum accelerate to the downside. Now, Tesla doesn't really have federal government contracts, but of course SpaceX, one of Musk's other large endeavors, does. And Musk at one point also posting on X that he would decommission one of his spacecrafts that had been commissioned for the government, right around just a little icing on the cake, I guess, or one last little barb here. Musk also said that President Trump is in the Epstein files, and that's why they had not been released. So a lot of back and forth today. A lot of messy lines on this chart that represent all of the back and forth that was happening. The latest, Elon Musk again posting on X and saying that due to tariffs, which he has already been outspoken about that he is not in favor of, that due to tariffs, he thinks there will be a recession in the second half of the year. So again, right now, seeing that 14% drop during the regular hours, and it is not letting up in the after hours, down another 2.25%. Josh.
Thank you, Julie. Well, Tesla stock down 14% on Thursday as the very public fallout between its CEO Elon Musk and President Trump escalates. For more on all this, let's welcome in here Ross Gerber of Gerber-Kawasaki Wealth and Investment Management. Ross, it is good to see you. So, listen, we got this brawl, Ross. It breaks out between Trump and Musk on social media. It gets heated, Ross, and very personal, very quickly. I'm sure you were watching and reading along with the rest of us as the posts were going back and forth. What did you make of it?
Well, thought I was going to have a pleasant day today, but this is a disaster. I mean, of epic proportion. For Tesla and SpaceX, and whether Elon wants to accept it or not, he did help Trump get elected. It is his fault that Trump is president of the United States, and now he's angered this person who's whether Elon likes it or not, he's president of the United States, makes him one of the most powerful people in the world. So I think Elon, in his ego and sort of weird haze of reality, actually thinks he's more powerful than Trump, and this is now a showdown. And this, as a shareholder, couldn't be worse for Elon and his properties and his investments and the future that he has, because Trump's going to be around, and Elon's pointed, for another 3.5 years. And I don't know why Elon thinks he's going to be around for another 40 years, but he seems to think he's going to live into his 90s, which I think is probably not true.
But Ross, let me ask you, just bring back to the stock today, which got shelled. I mean, it got nailed 14%.
Yeah.
Does that move, does it seem justified to you, Ross, off this?
Well, 100%. In fact, I think we're just getting started for the declines because a lot of the stock price's value isn't based off the underlying business. It's based off the perception that Elon being a part of Tesla is somehow wonderful. And so the stock, was trading at a good $150, $200 premium, what we call the Elon premium. Now he's close to the president. So it got an even bigger premium, and the perception was that this position was going to be wildly beneficial for example, full self-driving regulations on a federal level. But now the reality is sinking in that that's not going to happen. But even worse, there's going to be a retaliation against Tesla from Trump and Trump supporters that's going to be a lot worse than what Elon realizes, because I think there's a lot more MAGA supporters out there than Elon supporters.
And Ross, maybe one of the issues at the heart of this, or that triggered this, is the EV tax credit, which is, at least as the big beautiful bill exists now, will expire at the end of this year. Now, Elon sort of played it off. He says, I want to get rid of tax credits entirely. I don't need them. As a shareholder, how much does Tesla need those tax credits?
Well, of course, they need the tax credits, and simple economics would say that if the price of your product is cheaper, you will sell more of it. And if it gets more expensive, then you will sell less of it. So, obviously taking away the tax credits hurts Tesla. And it doesn't really matter any way you want to spin it. It just makes the car $7,500 more expensive for people, which then, obviously predicates out to lower demand, which is already low. So this is the death blow to Tesla, taking away the credits, and Elon was responsible for this. So, once again, he can blame Trump all he wants, but Trump wouldn't be doing anything if it weren't for Elon. So Elon is responsible for the death blow for his own company. So if this all goes through the way it does, and it isn't stalled out over time and with people's negative opinion towards Tesla because of Elon, I'm just extremely worried about the company's future.
Did your firm, Ross, does it still own Tesla shares?
Yeah. Our last 13F, we had 235,000 shares, and at one point we had over 500,000 shares at our top of owning Tesla, which is at the end of 21. And after the Twitter thing started happening, we started selling our stock, and we've been doing that. So our position's about 40% of what it was at the high. But we still have exposure. I lost over $10 million today, and I think it's worthy of a lawsuit. And I expect more of that to come in, and hopefully these pensions and other companies will sue the board of directors for Tesla for utter and complete negligence. I mean, it's just beyond negligence.
Ross, is that a suit that you would sign on to? Is that something that you would spearhead?
Well, I'm not a big fan of trying to resolve my problems in the legal system. I just sell my stock. That's what I have been doing, and what I'm continuing to recommend clients to do, and we'll probably be selling more aggressively in the coming weeks and months as we learn that robo-taxi isn't going to really work, and they're not really selling any cars, and full self-driving isn't any closer to being solved because Elon's still in denial that he has a hardware problem, not a software problem. So Tesla has a lot of challenges coming up, and this is only going to make it way, way worse for them.
Ross, the stock did enjoy that nice bump. I mean, even now, since early April, it's up about 20%. What did you attribute that bump to? Was that Musk coming back to work full-time at Tesla? Was it folks getting excited about the robo-taxi in Texas? What did you think?
Yeah, I think it's that. I think obviously building a robo-taxi business has a lot of potential, although I don't love the business, and I think it's going to be a lot harder for Tesla than they realize. But there's a perception between robotics, AI, the potential for merging Tesla with XAI, and then robo-taxi making Tesla into a very interesting looking play on the future. But it doesn't change the fact that it's an EV company that sells EV for almost 100% of its revenue, and the rest of its revenue comes from battery storage and charging, which are related to EV and all related to climate. So this change of Tesla from an EV company to an AI company was predicated on these things working and Elon having a positive relationship with the government. And so I think that whole premise is now being questioned. And if we're really just selling EVs, the numbers are horrible, and the stock should be trading under 200.
Ross, always great to see you on the show. Thank you, sir.
Looks like the internet went out.
Escalating tensions between President Trump and Tesla CEO Elon Musk sending shares of the EV maker lower. The downward move in Tesla shares weighing on the S&P 500 in today's trade. Yahoo Finance's Josh Schaefer joins us now with the trading day takeaways. Josh.
Hey, Josh, you got it. So this dispute between President Trump and Elon Musk really heating up today. Of course, Elon Musk had been coming after the president over the last several days regarding his tax bill. Well, today you had Trump responding. One of the key moves was Trump's response on Truth Social saying that he would pull government subsidies to Elon's companies such as Tesla. Here's our chart here, stock down over 14% today. Trump also adding in separate posts saying that, quote, Elon went crazy, essentially saying that he pushed Elon out of the government. Elon didn't necessarily choose to leave. But what I want to take a look at for a chart here, Josh, Tesla is now essentially back where it was on November 6, 2025. November 6, 2025, of course, was the day after the election, right? Tesla shares had just jumped. They were $288 a share. Well, today Tesla shares just closed at $284 a share. And one of the interesting things when you look at a chart like this and you see stock at a similar price is, okay, well, what's the pitch now, right? At 288 back in November, it was Musk is teaming up with Trump. There's all this optimism built into the stock. It sent the stock roaring, right? And even Musk coming back has sent the stock roaring. Now you're back at that same level, and you basically went from Musk probably being buddy-buddy with Trump to Musk clearly being an adversary of Trump. And I'm just curious what Wall Street makes of this sort of change in investment thesis over the next 24 hours and we start to digest this. Tesla shares down about 2% after hours now. Musk continuing to tweet. He just put out on X that Trump's tariffs might cause a recession. So it doesn't feel like this is ending. And I'm curious, when Musk is such a big part of this story, what investors are going to say about this over the next
Yeah, I mean, you could see that move, by the way, off.
Yeah.
Look at that April low. You're still up about 20% from that. And I mean, people have different theories about why that was, that move. Like maybe it was Musk coming back to work full-time at Tesla and his other companies, or maybe it was the robo-taxi launch, or the bet that a more affordable vehicle was on the way, but a strong move there. It is interesting to hear from the bulls, by the way. Dan Ives or Wedbush just pumped out another note. He told his clients, still bullish, right? So bullish on Tesla, still bullish on that autonomous future, but did note, I think how Dan put it was, this could put a fly in the ointment of Trump's regulatory framework, and that's kind of the worry.
It just overall, since Trump has taken office, you saw this for a little bit with Amazon, you saw this with Apple when Trump started mentioning them. The president mentioning your company's name on a consistent basis has not been friendly to stocks in the near term, right? So I think if you're a Tesla investor, simply rooting for whenever this moves on and you can start talking about something like the robo-taxi event.
And get back to the fundamentals.
Right, and get back from the president mentioning Tesla all the time.
Yep.
But the interesting part that we were watching today in the market too, Josh, it wasn't just Tesla moving. So you saw a lot of these Trump trades. Tesla was one of the key Trump trades, right? It was one of those trades that always seemed to go up in sort of the hype after Trump got into office. But take a look at Palantir today. Palantir fell 7%. So this was a report from Semaphore. Came out right here, right? That was your big drop. They said that some House Republicans do not like the government contracts that the government is signing with Palantir, worried about some privacy issues with all of that data being collected. And then you just look across the market at other Trump trades. So Trump spouted, or in this bout with Trump, or in this bout with Musk, look at what happened to DJT stock today, right? Again, right around that 1 p.m. time that we were following this, even Bitcoin, which has been a Musk and a Trump trade. Again, similar time frame. That stock goes down. And a final one I want to show you, this is an interesting one. So this is Destiny Tech 100. This is an ETF you can buy that gives you access to private market companies. What do you think Destiny Tech 100 owns that would make it go down 12%, Josh? Its largest holding is SpaceX. So now Musk coming out today, of course, saying that they're going to decommission that ship, and Trump saying that they might pause some of those contracts, right? There's sort of some iffiness there on what exactly is going on with the government and SpaceX. But for now, it seems like there's trouble with Musk and SpaceX as well.
Yeah, openly brawling with the President of the United States.
Yeah.
There you go. Thank you, Josh. Stick around. Much more Ash for a Trend. That's still to come. Oshkosh holding its investor day on Thursday, and while the company highlights future AI advancements, it's also navigating rising tariff risks that could reshape its supply chain. For more, we're bringing in here Matt Field, Chief Financial Officer and Executive Vice President of Oshkosh Corporation. Matt, great to see you on set.
Thanks for having me, Josh.
So
really excited to be here.
You had the investor day today. So bring us up to speed, Matt, in terms of what you're seeing in the business. What are you hearing from those Oshkosh customers right now?
Yeah, really exciting day today. We were down at New York Stock Exchange, and for those those who don't know what Oshkosh is, we're a 108-year-old global industrial technology company. We build products for everyday heroes like firefighters, U.S. Postal Service, refuse collectors, but also Department of Defense, so military, people who serve in the military as well. So, and we're also on job sites. We do a lot of industrial technology. But today we shared long-term targets, growth objectives, talked about how we're going to achieve those. Really favorably received by the investment community. Our customers are really excited about our products and technologies that we're bringing to them to solve real-world problems.
One topic front and center for executives like yourself, Matt, for investors listening right now, it's been tariffs, right? So I am curious what kind of exposure Oshkosh has there. How are you all thinking through that dynamic? Does it mean you have to eat costs, Matt? Does it mean you pass them along, some combination of the two?
Yeah, like all companies, we've been working through that. And so for Oshkosh, we're mostly a US-based company. Most of what we build in the US, we sell in the US. And that's true the rest of the world as well. Most of our production is regional. So while we do have exposure that we're working through, we're working with our supply base in terms of how do they manage their suppliers and where should they source their materials from and so forth. We're working with our customers, obviously, but most importantly, what we're doing is everything we can control in terms of our own cost base. So like all other companies, we're taking a really hard look at our cost to make sure what we control, we're managing in this time of uncertainty. They're on again, off again.
Do you think, Matt, you could pass some of that along to customers in an environment against what is an uncertain macro here?
Yeah, so our first line of defense is obviously to do what we can on the cost side. So work with suppliers, resource where we can. You need a stable environment to do that successfully. And so we're working on that, having contingency plans and so forth. And then obviously what we can't offset, we'll have to work with customers. And that varies by segment in terms of how you can do that and what you partner with to find offsets on. You
mentioned a lot of the industries you're in, so fire, defense. I'm very curious, what are you seeing in construction specifically, which is something we talk a lot about on the show, and especially with rates where they are?
Yeah, so construction, we provide a lot of equipment to the construction industry on large mega projects. And so we're seeing actually the non-residential parts of that hold up quite well, some of the local projects. People holding off on a little bit longer than we were thinking about maybe a year ago, where interest rates have held up more. But the mega projects, those are, they're underway. You see that in the data. Data centers are being constructed. You hear a lot about nuclear these days. So a lot of mega projects still needing our equipment because we're often the first on site, and then we're there the whole project, and then we're the last equipment off because we're the ones who are unloading equipment and loading equipment.
Matt, it was great to have you on set today. Thanks so much for your time. Appreciate it.
Thank you so much. Appreciate it, Josh.
Well, SailGP was supposed to be a billionaire's vanity project. Instead, it has actually become one of the world's fastest growing sports. For more, let's welcome in here Joe Pompliano, Yahoo Finance Sports Report host. Joe, it is great to see you. So this week on your Substack, I saw you wrote about the rise of SailGP, Joe. For the uninitiated, walk us through what this sport is and why it's proving so popular.
Yeah, thanks for having me, Josh. Think about SailGP as sort of the Formula One of sailing, right? There's 12 teams. They're represented by nations, USA, Germany, New Zealand, et cetera. And they travel all over the world to different countries. They'll race on 5 different continents this year, and they host races. Now, the way these are set up are very fan-friendly. There's going to be one in New York City this weekend, actually. People are going to gather on Governor's Island. There's going to be grandstands. They're going to race right out in front of the water right there. And the way it works is it's a 2-day event. There's a series of races. You get points for where you finish, very similar to Formula One. And then there is a final race on the Sunday that awards people the most points with a $2 million prize for winning the season-long championship. Now, the one main difference I would say between this model and Formula One is that in Formula One, fans of the sport will know that the best and most equipped teams with the biggest balance sheets win the most because they have the most resources to build the best car. In SailGP, everyone is using the exact same equipment. There are these catamarans that are ridiculously fast. They go over 60 miles an hour. They can come out of the water, and they're very cool and high tech. The broadcast is fantastic. And there's a sport, to your point, that when Larry Ellison started this, the billionaire co-founder of Oracle, in 2018, many people didn't think it was going to be successful. Sailing is a very niche sport. But what I've realized over the years is the broadcast is so good, and it's such a good entertainment value that many people who have never sailed in their life, including me, enjoy watching this. So it's been cool to see the sport grow over the last 6 and 7 years.
Is SailGP, is it profitable yet, Joe?
Not yet, but they could be. They've kept reinvesting a lot of the money in because the business has grown so much faster than they initially believed it would. They're going to do somewhere between $100 to $150 million in revenue this year. Now, the structure of the revenue streams are very similar, again, to Formula One. They're making money on host fees and sponsorships and merchandise and licensing deals and broadcast deals and all the normal stuff you would think there. But the other thing that has been really helpful to them is that initially they owned all of the teams. So they started out with 6 teams that were owned by the league. They now have 12 teams, but they've started selling those teams. So 10 out of the 12 teams have been sold. And actually, Ryan Reynolds bought the 11th one this morning. It was announced, the New Zealand team. So those teams are selling for $40, $50, $60 million each. That money goes back to the league. Plus, the teams then have to assume the operational cost for the team that year, which is around $10 million. So they're getting money from all the typical revenue streams, but also selling the franchises too. So the sport has grown a lot more than I think they initially expected, along with some sponsorship deals and things like that. Rolex left Formula One and is now part of SailGP. So we'll see how this continues over the coming years, but the expectation is that they could be profitable and probably will be within the next 1 or 2 years.
All right, having Ryan Reynolds involved, that doesn't hurt. This sport does have kind of Formula One vibes, Joe. Do you think it could ever match Formula One?
It's got an uphill battle. I mean, motorsports is just such a bigger category than sailing, but I think it can certainly put a dent in it. If you think about where they started in 2019 was their first season. I mean, this is a brand new sports league, and we're here now in 2025 saying they're doing $100 to $150 million in revenue. They have broadcast deals in over 200 countries. They have celebrity owners. They have big sponsorship deals with companies like Rolex and Emirates and other businesses like that. So they've made quite a lot of progress. Eventually, they'll probably add some more teams, add more races. And right now they're only getting 6 to 7 figure hosting fees from some of these countries. If you think about Formula One, those fees can go up to $50 million for one race a year in some of these countries. So they got quite a long runway to go, but it certainly seems like they're making progress.
Finally, you mentioned those broadcast deals, Joe. What's viewership broadly like?
Yeah, so it really depends. Some of the broadcast deals are streaming only, but what SailGP has done that I think was incredibly smart is they focused on free to broadcast networks. So everything is free on TV outside of some of the streaming deals that are ancillary. But what that initially meant was that their broadcast payments were a little bit lower. In most cases, they actually weren't being paid at all. But they signed deals with companies like CBS here in the US. And what that did was it put on some of their races after NFL football games on Sundays in the fall. So you can imagine what that does for viewership. One of their races last year in Spain had 1.78 million viewers, which was the most watched sailing race in over 30 years. We're talking about the Olympics, America's Cup, anything else like that. So the distribution has been phenomenal, and it's been great for the sport as a result.
Joe, thank you. Always great to see you. And be sure to scan the QR code below so you can stay up to date with the latest episodes of the Yahoo Finance Sports Report that drops every Thursday at 5 p.m. Eastern. Well, that is a wrap on today's Ask for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all of the latest market-moving stories affecting your wallet. Have a great night.